Good afternoon and welcome to the Financial Inclusion Forum event on Central Bank Digital Currencies. Thank you to our host, Axion. It's great to be partnering again. We've held an event pretty much every year during Financial Inclusion Week, and most recently via the platform. We're grateful for this relationship and how we have and continue to work together to share best practice in inclusive finance. I would also like to thank the panelists, and in particular Michael Roth, my fellow board member, and Rod Dubitsky, our executive director, for putting this event together, but a particular shout out to Rory Copeland, who has just joined the board of the Financial Inclusion Forum. Welcome, Rory. I'm Paul Blythe, the chair of the Financial Inclusion Forum. We have many old friends with us today, but other folks who may be attending for the first time a Financial Inclusion Forum presentation. We exist to raise awareness of financial inclusion and share best practice over the last 17 years rather. This has encompassed everything from economic empowerment to microfinance and impact investment. We do this via holding events for industry practitioners, experts, and the general public alike. We also share best practice via our social media platforms, website, and blog. We are a 100% volunteer board, and all our events are free. We are supported by a part-time professional secretariat, and so couldn't be here without the support of our corporate and individual sponsors. So I'd like to more formally thank City Inclusive Finance, British International Investment, the Golden Bottle Trust, Vision Fund, and Fern Software. Please support our work. If your organization has interest in economic empowerment, financial inclusion, microfinance, impact investment, and the like in the UK and also around the world, then please get in touch with us at admin@financialinclusionforum.org.uk or as an individual sponsor. Our event today. Last year, we did an event on universal basic income, which was excellent and certainly timely. So the panel today has a tough act to follow. This year, it's central bank digital currencies. What a hot topic. Is it a panacea to the challenges of enabling liquidity in hard to reach places? Or a deep state challenge to civil liberties? Stay tuned to learn more. I'll leave the panel with an anecdote from a few years ago. This is a true story. I wasn't there, but a colleague was. The governor of a central bank, who shall remain nameless, and it's not Mark Carney, I promise, in response to the question, are you interested in exploring how we can create a central bank digital currency for your country, responded with, quote, I don't want a, enter expletive, Russian telco controlling my currency, thank you very much. Without further ado, I will hand over to Mehmet. Thank you.
Hello, thanks, Paul. Good morning, good afternoon, good evening. Can you hear me?
Yes.
Okay. Thanks, Paul, for the intro. Let's start with some basics about central bank digital currencies. Before getting into the session, it's clear from the name a CBDC is a digital currency issued by a central bank in the country's currency. It represents a direct claim on a central bank. It is the liability on the balance sheet of a central bank. We can say that there are two types of CBDC, wholesale CBDC and retail CBDC. Wholesale CBDC is limited to users such as banks, such as other financial institutions. And wholesale CBDC could be considered as another instrument for the settlement between the banks, between financial institutions. Retail CBDC is the one that is issued to the public, which will be used by individuals, by businesses, by companies, etc. We can say that it's a new way to store value and make payments. According to Atlantic Council's CBDC tracker, now 105 countries representing more than 95% of global GDP are exploring researching CBDC. And as you know, some central banks already officially launched their retail CBDC. For example, Central Bank of the Bahamas and Central Bank of Nigeria. They already started their CBDC. Many countries are in the advanced stages of exploration, and they are now piloting. For example, Bank of Ghana and ECCB, Eastern Caribbean Central Bank, started their CBDC, retail CBDC pilots. When I look at the announcements and then papers of countries, I see that there are different motivations of different central banks in researching CBDC, in looking at CBDC. The objectives, the motivations change from enhancing domestic payment system to increasing the competition in the country, to ensuring the access of individuals to the central bank money, or to reducing crypto assets adoption, etc. However, financial inclusion is emerging as the primary motivation, primary objective for developing and researching a CBDC across EMDs, across emerging markets and developing economies. Thank you. Let me stop here. Back to you, Michael.
Thank you, Mehmet, for this excellent introduction. And this is really showing why we wanted to have this session. It's because, one, the objective, which many central banks put out there for having a CBDC, is financial inclusion. And there are at least some people who would question that it actually provides added value to financial inclusion. And the other big reason from our perspective is that it's a discussion all over the world. So you can see very nicely on this map that societies and central banks across the globe are looking at this and are trying things. Now, I will let all the panelists introduce themselves and share their take on whether CBDCs can be a game changer for financial inclusion or not. Before I go there, I would like to also clarify that every one of our fantastic panelists is speaking at their own personal capacity, sharing their personal views, and in no way does whatever they say today in the session represent their employer's views or policies or strategies in this area. So without further ado, I'll hand it over to Ali to introduce himself, followed by Ashraf.
Good evening. It's almost 7 o'clock in Nairobi, where I am based. My name is Ali Hussein. I am the founding chair of the Association of Fintechs in Kenya. I'm also a fintech entrepreneur. For me today, to just basically give a bit of background when it comes to CBDCs across Africa, what is happening, and what sort of impact these CBDCs may have. One of the interesting things is that in Africa, we have categories of different stages of CBDC launches. So we have launched CBDC, which Nigeria has launched CBDC 2021 in October. We have pilots in South Africa and Ghana. We have research mode in Namibia, Zambia, Zimbabwe, Madagascar, Mauritius, Tanzania, Rwanda, Kenya, and Uganda. So this is a super interesting conversation to have across Africa, because one of the very interesting statistics you may want to consider is that Africa has among the highest transaction volumes when it comes to cryptocurrencies in a certain category. In the micro, small transaction categories, Africa has the highest, actually at about 80% of the micro. So the question is, why now? Why are the central banks thinking about or launching in areas? Where I'm sitting, I think most central bankers are launching CBDCs in response to the crypto revolution. How that is going to pan out in the mid to long term is anybody's guess. The one thing that I'm always asking my friends is, you have on one side a decentralized ecosystem. On the other side, CBDCs are far from decentralized. So you can read between the lines why central bankers are focused and really looking at CBDCs. But one thing that I am really talking about across the region, now I'm wearing my hat as executive board member of the Africa FinTech Network, and this is my personal view. But as a regional organization, one of the things that keeps us awake every morning, every day, is financial inclusion. And financial inclusion from a Pan-African perspective needs to go beyond just access to credit. It needs to speak to, because the issue of access to credit, I think we're almost past that conversation. What is really, really important is, how do we move beyond just access to credit? And I'm going to stop there because I know we only have an hour, but I can go on and on this topic for the.
Excellent. Thanks, Ali. Just very quickly, game changer or not for financial inclusion from your perspective?
Not.
Okay, we'll come back to that. Thank you. Ashraf, please.
Yeah, thank you, and good morning from an increasingly cold Washington, D.C. My name is Ashraf Khan. I work with the International Monetary Fund. First of all, many thanks to Rod, Paul, and Michael for having me here today. It's an honor being in the in a call with so many distinguished experts on this topic from all kinds of different vantage points. As I mentioned, I work at the IMF. I lead the fund's work on central bank governance, risk management, and transparency. And perhaps in a somewhat ironic twist of fate, I'm also the lead expert on cash currency management at the IMF. So that's something we can hopefully talk about later as well. It's specifically my focus on central bank risk management that ties me into the work that the IMF is doing on central bank digital currency. So I examine the context in which central banks are able to explore, work with, roll out, mitigate the risks related to central bank digital currencies from their own point of view. And I think a lot of that ties into what Ali just now mentioned, also moving beyond just access to credit. There's a whole wealth of related topics still to be discovered, both from a policy point of view from central banks and an operational point of view. I have a background in law and economics. I used to work at the Central Bank of the Netherlands, and before that at the Dutch Ministry of Foreign Trade, where I was a WTO trade negotiator. And I started off as in a brief moment, as a corporate lawyer back in the Netherlands. Game changer or not, I'm really interested in why Ali said no, but I guess we'll get to that. I would say yes, but in the good IMF spirit, I'd like to say the thing is, it's a game changer, but financial inclusion is not the only game in town, and that raises a lot of questions that are relevant on how we as a community, but also central banks in specific, look at central bank digital currencies. I'll stop right there. Back to you, Michael. Thank you.
Excellent. Thanks, Ashraf. Mehmet.
Hi again. So my name is Mehmet Kerse. I'm a consultant with CGAP, and I work on digital financial services regulation and supervision, recently focusing on fintechs, digital banking, mobile money, electronic money, and digital currencies. I have been following the CBDC space for some time and looking at CBDC projects from a financial inclusion perspective. So coming back to Michael's question, yes, CBDC has a potential to advance financial inclusion, but I think it's important to highlight that CBDC is not a panacea for financial inclusion. It has a potential to add a value, great value to the financial excluded individuals and low-income people. But this depends on how a central bank designs its CBDC, its retail CBDC especially. And this depends on what supporting policies, what policies the central bank and the regulators will adopt to address inclusion, financial inclusion challenges in the country. So there are some design considerations that the developing country EMD central banks need to consider. For example, how the individuals without a reliable internet connection can access CBDC, for example. Will there be any sort of offline solutions? Or how will the customer onboarding be conducted, be handled? And also, maybe there's an interoperability question there. Will the CBDC be interoperable with other digital payment solutions in the country? So these are just some design consideration. But before shaping up the CBDC, a central bank asks these questions itself. Thank you.
Thanks, Mehmet. So yeah, so thanks, Ashraf. I think Ashraf mentioned the key question of the actual role of central banks in the design. And your point, Mehmet, which we will come back to, is does it actually address challenges which are already not being overcome in normal e-money and mobile money ecosystems, right? We'll come to those points. Rory?
Hello, thank you very much. I'm Rory Copeland. I'm a financial regulatory lawyer here in London at Allen & Overy. I specialize in fintech, payments, and virtual assets. And I advise all manner of people from startups, crypto startups, through to the big sort of tech giants, investment banks and others trying to get into the space, from traditional finance and governments and central banks regulating the space. This has included the big conversation, should we do a CBDC to try to address virtual assets, address financial inclusion, keep up with everybody else, and if so, what laws do we need to change? And so from this end of the telescope, I get to see some of these sort of really big picture policy questions and discussions that governments and central banks go through, what it means for their mandates as unelected central banks, which is a really fascinating question. And I happen, in a personal capacity, to be a trustee of a small charity called Peace Child International that delivers entrepreneurship training to young women in rural Sierra Leone. And what I find fascinating is how far away the big picture policy debates that happen in the UK and Washington and places like this can be from the rural Sierra Leonean women who need access to money of some sort to run their businesses day to day. And I think how we bridge that divide will be, frankly, far more important to the success or failure of CBDC than any clever legals or policy debates or anything else for that matter. And so is CBDC a game changer? It can be if it is used as one tool amongst a number of others to address financial inclusion. I'll leave it there for now.
Okay, great. Thanks, Rory. Tim.
Hi, it's great to be here. Thanks for having me. I'm historically, in fact, I'm historic. I'm extraordinarily old. I keep being amazed at how old I am. I started getting involved seriously in this space in 1989. I co-invented Mondex Digital Cash in 1990. I developed that from inside NatWest, sold it around the world, and it eventually got bought by MasterCard and buried without trace. Go and talk to Gene Lockhart if you want confirmation of that. I had another go at CBDCs when I co-invented a design called Tibado in 2014. And that went absolutely nowhere because everybody was so excited about cryptocurrencies. Now, I believe that CBDCs are an absolute game changer if done properly. There's a huge debate about whether they should be token-based or account-based. So I believe that an account-based CBDC is an oxymoron. For something to call itself cash, it needs to be a token that delivers value out with any accounting structure. And if you do a token-based CBDC, I think it's a massive game changer because frankly, in the United Kingdom, I don't believe that a bank account is necessary for about 1/3 of the population. If a token-based CBDC were in place, people could be paid in it, they could pay their regular payments away in it, it would be far less frictional than the nonsense of having to have a bank account. It would just be better. So I'm a huge fan, but it's got to be done properly if it's going to make the difference it could make. Thanks.
Mm-hmm. Thanks, Tim. Thanks, everyone. So then, yeah, I think there's a couple of interesting questions coming out of your submission. So maybe, Tim, to start with you, could you just elaborate on that a bit more? Why CBDCs would eliminate the need for a bank account, and then also enlighten us a bit more on, you know, whether the discussion we're having now is new at all or whether it has been around for some time.
Right. So the first wave of work on digital cash involved an initiative called DigiCash by a guy called David Chaum, and then me and others doing Mondex, and then a few other people. And this period was about 1987, 88 through to about 96, 97. There was, in the latter part of that period, loads of stuff happened around the world in the wake of DigiCash and Mondex. And then it all fell away for a variety of reasons. And then the crypto thing took off with the Nakamoto essay, and we all know about that, so there's no point in needing to talk about that. But for me, it took the focus away from what I think is the real debate, which is giving people fiat-denominated, central bank issued digital cash tokens to be a part of their payments life. And so, yes, the debate's been around a long time. It's been buried for the last decade by cryptocurrencies. It's gradually coming back as cryptocurrencies fade away. But you know, it's going to take a long time to separate out fiat digital cash from cryptocurrencies. The use cases are many and varied. It can crash the cost of remittances. It is so low friction in terms of paying people. And this doesn't mean in a non-taxed way. The employer would just download some token-based CBDC onto their accounting software package, and it would just fire out across the internet to the recipient in real time, okay? So I would say to people, it's a bit bizarre, take your mind back to 1940, 1935, when most people in most societies were paid in cash. The immediacy of getting the cash and then being able to distribute it instantly out with any bank account structure was very powerful. Token-based CBDCs can mimic that power. And I haven't even got yet to the Internet of Things and 24/7 corporate trading out with whether the bank is open, which would also be facilitated by CBDCs. And finally, I find the concept of wholesale CBDCs and retail CBDCs mildly spurious. A single design can, with suitable safeguards, can span the lot all the way from high values right down to retail. Thanks.
Excellent. Yeah, so use cases is a very interesting point, and I think especially maybe also from Ali's perspective, and Ali said he doesn't think it's a game changer for financial inclusion. So if you look at M-Pesa and other forms of e-money and mobile money across sub-Saharan Africa. Ali, do you think CBDCs would make a difference if CBK issued CBDCs?
So, Timothy sort of answered part of that question, but let me just drill down to the situation on the ground across Africa. The issue with CBDCs is that in my humble opinion, the whole essence of CBDCs is as a reaction to crypto. That's one. Two, what is happening is that the process of distribution has not been thought through. The e-Naira was launched in October 2021, struggled even with banks. They now have a partnership with Flutterwave, so that's gaining some traction. But if you look at the situation across Africa, especially in my home country, Kenya, mobile money is literally pervasive across the economic landscape, both small businesses, individuals, large businesses. Everyone has a mobile wallet. So I fail to understand and appreciate what role that the CBDC will play unless we are starting to talk about the CBDCs, the central banks starting to appreciate and understand the distribution ecosystem that are already in place. But what you're finding is that most central bankers want to start from scratch. And I think the lessons from the e-Naira perspective are good lessons to look at. That's why now they're starting to look at partnering with the fintechs on the ground. There's the other issue of privacy and the centralized control from governments. I don't think governments have answered that question. We are seeing that issue being topmost in China with the ECYNN, where we are now starting to be told that the government can even use that to deny payment for certain products. Who wants that? So there are certain issues that need to be answered for the users, for the population, for people who are already used to some form of digital money, whether it's crypto or mobile money. So to just wrap it up for me is it's going to be difficult for government officials who don't think through the distribution concept of how these digital currencies are going to be executed for them to actually execute. I mean, it's been 1 year with the e-Naira. Those are lessons that can be learned to ensure that the central banks that are now doing research can start plugging into the ecosystem that are currently available.
Yeah, those are very relevant points. So I think maybe Ashraf, in terms of the roles of central bank, and because you're a proponent, have something to say about this. And then after that, Mehmet, question to you, whether also from the work you've seen, that CGAP has seen, CBDCs can actually reduce the cost for consumers, also because Ali raised the distribution aspect.
Yeah, maybe just to build on Ali's last point again, where he said, the implementation or the execution might be lacking, and how do you move retail CBDCs from this kind of pilot theoretic kind of phase to something that's really practical, operational, and has added value, not obviously in the least from a financial inclusion perspective. So I think that highlights one of the concerns that I definitely have, is that CBDC is also a bit of a buzzword, right? Everybody is wants to explore CBDC. I mean, I don't know if it was, I think Paul started with this anecdote of a governor, saying, I don't want the specific telco or whatever. But, the matter of fact is that most central bank governors are currently considering, hey, my neighbors are doing something on CBDC. Everybody's talking about CBDC. Come to the IMF and the World Bank. Everybody will talk about CBDC. Is this something that I need to explore as well? And so there's, I think, a phase missing where you need to take a little bit of time as a policymaker, whether at the central bank or at the government, sit back and go like, okay, so this is like a Swiss Army knife. CBDC is like a Swiss Army knife. You can pull out all these neat little fidgety kind of things and saws and knives and whatever, but what do I need to use this multifaceted tool for? Is there anything that my current tool set is not able to do as efficiently, as effectively, or perhaps even better, that I want to explore the CBDC for, right? So it's not a goal on its own, it's a tool. And if you start going down this rabbit hole of thinking, okay, if CBDC is a tool, so what are the objectives of central banks? You might say financial inclusion is an objective, of course, that could very well be. Price stability, financial stability at large. Nowadays, central banks are, inclined to think about climate change, about gender diversity, financial integrity, AML/CFT, consumer protection, payment system stability. Now here I have this Swiss Army knife. Is this helping me further my advancement in one or more of those tools? If so, are there any clashes? How do I then operationalize that? So that's a very essential question that central bank governors and board members need to ask themselves. And then you're not even touching upon the second component. So this first component is the policy question, right? And that's why I say, I think in retail CBDC can be very helpful in countries where, you have geographical hurdles, mountains, a lot of islands, but you do have good telephone infrastructure, electricity, you have low number of bank accounts, high dependence on cash, lot of trust in the domestic currency as it already exists. We're not talking about introducing a Bitcoin here, right? So you need to have trust in the central bank, in the currency. Those kind of situations are more conducive probably to explore a retail CBDC and further the goal of financial inclusion. That's the first one, policy. The second one is, are you as a central bank ready to explore this more? I mean, I think Ali already pointed out, or I think it was Tim even, third-party dependency. Which central bank is developing a CBDC in-house? Even the Swedes put out a bid for a third party to help them on this, right? So if you don't have strong risk management, project management, in-house experience and capacity, where are you putting your crown jewels, right? So something to think about. And I think probably, Michael, we could come back to that because I'm going off on a tangent now. But yes, game changer. But the points that Ali made are really critical. As a governor, as a central bank, as a government, sit back, take a moment of reflection. What am I trying to solve here?
Thank you. Yeah, Mehmet, before you start, I will add the question to you. What can CBDCs do that mobile money cannot do? Yeah. If you have an answer to this, you can also include it in your answer.
Great question. So can CBDC reduce the cost for the individuals, for the consumers? So there are many central banks that are planning to keep CBDC transaction fees low, or some are planning to make it free. So this is great for the low income, for the poor people. However, it's important for a central bank to consider how the costs related to providing like CBDC services will be recovered. So what I mean is, if these costs are absorbed by the intermediaries, I mean the financial institutions, financial service providers, there may not be a viable business case for these institutions. So in this case, these financial service providers, institutions may not be willing to offer CBDC services. So these providers are actually important for a successful two-tier CBDC system. So that's why it's important for the central bank to engage the potential intermediaries, the financial service providers, to engage with them from the early stages of the project. Another question was, Michael?
And it can be to anyone, it's to anyone. What can CBDCs do that mobile money cannot do? Because a lot of the arguments in favor of CBDCs, at least in emerging markets, have been it's accessible to everyone, it's more user-friendly than bank accounts, it helps people in rural areas, but all of those aspects are perfectly well addressed by mobile money, in my view.
I think,
Michael,
I can jump on here quickly on two small things. One of which, this is a lawyer point, and it is removing counterparty risk, removing the risk of insolvency, or frankly a range of other issues that the e-money provider might experience. We in the UK have e-money issuers and providers who go insolvent. That is in a I mean, it feels a bit rich saying it this afternoon, in a relatively stable economy. And so being able to de-risk financial institutions is good in two respects. One, it's good for financial stability for where financial institutions do get in trouble. And two, because it reduces the risk that the financial institution holds, it also enables them to take that out of their pricing, where they don't have to consider their own, the risk that they pose and everything relating to that in how they price their services. A completely different point is, how does this help a woman in rural Sierra Leone who needs not only financial services, but also needs the internet and the mobile phone and everything else. And this is what I mean when I say CBDC needs to be used as one amongst a number of tools in order to help people. And it'll be a different selection in any economy, depending on the circumstances. However, what CBDC does represent is a market intervention by a central bank. There are economies in the world where retail banking is not prevalent, not because it can't be done, but because there is no commercial interest in doing it. And where you have a scenario like that, relying on the market to do things by itself doesn't always work. And so whilst, a CBDC to someone in rural Sierra Leone still requires a mobile phone, still requires roads and telephone lines and internet access along the way, it will effectively force mobile money providers or traditional financial institutions to get in there as well in a competitive manner.
Michael, could I just break in there? Because I don't think it does, Rory. You see, we don't need the mobile money and the bank stuff if you just do a CBDC properly. It just does away with the need for a lot of that garbage. And the answer to the question, what does CBDC give you that mobile money doesn't? Privacy, right? No fees, nobody trying to market against your transactions. It's like cash. A token-based CBDC, you are not being monitored. Forget the Chinese. That's
Timothy, with all due respect, you are assuming a benevolent government. The world doesn't work like that. With all due respect, the world simply doesn't work like that.
But it has been physical cash for hundreds of years, right? It has
well, physical cash. Well, physical cash is physical cash. I mean, there is no, we can. If I have cash, the government can't track me, can
Right.
trace where I'm spending that money.
Brilliant.
But the CBDC, government can. Government can.
No.
Of course they
That's
can.
the whole point. No,
Okay,
they can't.
okay. Two questions, guys. One is the of trust. So on trust, maybe Ali, you can speak to that. I can sense there might be an issue of trust in terms of people or governments being able to trace digital currencies. And then Tim, please come in, because I think there's also a design question here. Can privacy be built into the design of a CBDC? And then we can also elaborate a little bit more on how should a CBDC be designed and who should design it. Yeah, so Ali, maybe can you come in on the trust question, and anybody else who has a thought on that? You're on mute, Ali.
Look, guys, on a light note, do the British trust the government at this point in time?
Yes, because
You know,
the Bank of
we
England and the Treasury
we
are in
can
charge.
we can go down this rabbit hole until kingdom come. I think the issue, the whole essence of digital currencies is about privacy. Now, I can say without fear of contradiction is that the Europeans have done a great job on the issues of privacy with the GDPR. Now, without foundational data privacy and protection mechanisms in any government, the CBDCs will just be another way for government to track and trace every little thing that we do. So before we go even one step further, let governments address the issue of trust and privacy.
Okay, Tim, what do you have to say about this?
I could not agree more with Ali. He is absolutely right. And it's getting to one of the key issues here. The whole debate about CBDCs is being handled by central bankers who are not elected by citizens on a ticket of talking about privacy and trust, right? That's what governments are for. There's a missing public policy debate here about privacy. And we are losing the product, as Ali said, that is private, which you can't be tracked. We're losing physical cash because central banks have been asleep at the wheel, and their market shares of cash have gone down from, in Sweden, 96% of spontaneous transactions to 7% or less of spontaneous transactions. And they've done nothing apart from some experimentation to put that right. You can design CBDCs with privacy. And by the way, it's a more complicated conversation. There is always a bit more oversight in digital because of its inherent nature. The comms can be tracked. But it can be largely a non-tracked thing. Ali's concerns are absolutely correct. A less benevolent set of governments will not do that. And therefore, I'd love to see more benevolent governments start with token-based CBDCs that are essentially private and not tracked by anybody. And the way into that is to recognize that cash is a powerful product. Central banks own it. It's in two form factors at the moment, notes and coin. All CBDCs should be is a third form factor, a digital coin or a digital token to complement the other two. And they're just as relevant for the developed world as they are for all the rest of the world. They would have an enormous role here in the UK because 25 to 30% of people in the UK don't need a bank account, right? But they've got one because the DBCDs aren't there. I'll stop.
Thank you. Okay, so we'll have Ashraf and Mehmet coming in very quickly and then open it up for questions from the audience.
Yeah, so maybe very quickly on the trust point, I always like to give the example of Somalia, which I've worked on for a number of years, where 95% of the domestic currency, the Somali shilling, is counterfeit. 95%, just let that sink in. So they pay for a small change for cigarettes and those kind of things, or tea, like in bricks. One note is printed and the other note at the bottom is printed, and in between, you don't even know if they're notes. Yet there is some form of trust that this is something that, short of a barter system, we can use to pay for smaller commodities. Now, Somalia is an exception in that sense. Most countries where there's hyperinflation or there's long-term, economic issues, you cannot solve that by, what we used to do in the olden days, right? Take off a number of zeros of the banknotes, introduce a new design. You cannot force trust, right? Introduction of the CBDC will also not force trust. If anything, it brings a host of additional cybersecurity issues and whatnot that might get people even more uncomfortable, let alone the anonymity, privacy concerns. I'm not going into that even at this point. So if you want to introduce a CBDC that is effective, and and this is the point I made, you need to take a step back. Do you have strong macroeconomic conditions? Do you have strong supervision? What if the banks in this token-based, CBDC that Tim is talking about, if the banks as intermediaries are not strong enough, are not supervised enough, are owned by oligarchs, nobody's going to trust that kind of a CBDC. So again, it's not a panacea as Paul's, raised as the initial question. It's the tail of the dragon, and you start tugging it, and there's this whole wealth of issues that comes along with it that do not make a CBDC impossible, but do possibly need to be addressed before you can successfully issue a CBDC. Over to Mehmet. Thank you.
Thank you. Maybe let me get back to Rory's point on women's financial inclusion. So as we talked, the central bank should also consider the gender gap while developing CBDC. So as you know, there's a gender gap in mobile ownership in many EMDs in many developing countries. And many women in rural areas also do not have a chance to access reliable internet connection. So they cannot afford smartphones, they cannot afford the cost of internet, etc. So the digital gap between genders in these countries may act as a challenge in having a universal retail CBDC. And actually, this may worsen the inequalities. So, the CBDC design should consider how these women access CBDC. So what I mean is, a retail CBDC can only be accessed with, for example, a reliable internet connection, and with a smartphone may not be accessed by the women in rural areas. So that said, maybe I should go back to eNaira. As you know, Nigeria officially launched its CBDC eNaira, as we all know, yes. But Central Bank of Nigeria recently decided to introduce USSD code to enable individuals, to enable people with non-smartphones, with basic feature phones, to make eNaira transactions on its CBDC platform. Thank you.
Excellent. Thank you, Mehmet. We have a question from the audience on whether blockchain is needed to implement a CBDC. So according to Project Hamilton by MIT and Boston Fed, it is not needed. So Rory, could you take that, please, and also speak about the key drive, or where the discussion in your perspective is driven at the moment?
Sure. Yeah, great question about blockchain, particularly because this allows me to segue to cross-border CBDCs, which we haven't talked about much, which are interesting. So yeah, do you need blockchain or any form of distributed ledger technology for a CBDC? I think, as I think Ali said earlier, CBDCs are by their nature highly centralized. They're a claim on the central bank. They are issued by the central bank. Yes, they may be distributed by others, but people distribute e-money or mobile money today, and there's no need for distributed ledgers or anything like that. So I think that in where your context is a domestic CBDC issued for domestic circulation only, I see the force in the Project Hamilton argument. You don't need it. And indeed, places like the Bank of England have been very, very clear that they won't do it. The exception to this is in the context of cross-border CBDCs. And that's where there's a very exciting project called mBridge, that a number of central banks have been working on for the past couple of years. I sort of see bits of pieces of this from around the edges. And the principle of mBridge is in technical terms a cross-border liquidity solution, whereby a number of central banks will hold each other's CBDCs as well as their own in order to facilitate cross-border transactions. And that's really important for a load of reasons in the cross-border remittance space that I think have immense social impact. However, it raises the question, who gets to be in charge? Which central bank gets to be the one to keep track of how much money everybody else has in order to enable these instant cross-border payments? And in this case, by the way, it's fascinating from a legal perspective, but I won't go there. In this case, whether we call it blockchain DLT or decentralization generally, a mechanism to enable cooperation, to enable a group of equal central banks in a cross-border context is really difficult to do without something like DLT or something that looks quite close to it. And that's where that's getting back to what blockchain was all about in the first place. It's, we used to have this running joke that every week there was a new thing that was going to be powered by blockchain, healthcare powered by blockchain. It was one of these words that you threw into your funding pitches. Paring it all back, when do you actually need distributed decision-making with distributed ledgers? And so I think that is the instance in which blockchain or something akin to it is important.
Okay, excellent. Thanks, Rory. So we have 3 more questions, and then also as an announcement to the audience, then we will have a poll of whether you think CBDCs are a game changer for financial inclusion or not. So the first question will be for Tim. An audience member is asking that you, Tim, stated that only 1/3 of the UK population 1/3 does not need a bank account. In your view, who needs and who does not need an account, and what are the thresholds of needing an account? Then secondly, we will talk about the existing cost of cash. So is there an argument to be made for CBDCs in terms of eliminating actually a cost of cash? And Mehmet, if you can take that. And then thirdly, and it comes back, and I have to be, I'm not going to be very impartial about this one. I'm still not fully convinced what the benefit is of over mobile money. And one of the audience members asked the same. How does CBDC address hurdles for traditional difficulties in accessing financial services or digital financial services for people without an ID, for people without connectivity, for women and cash-dependent SMEs? And that Ali or Ashraf can take. I'll let it up to you. So Tim, go first, please.
Thanks very much. So everything is a sort of a guess, isn't it? Who needs a bank account? As a sort of banker phrase, there's something called maturity transformation, which means you need to borrow money and you haven't got it right now and all that kind of stuff. So access to credit, the more credit and more types of credit you want, the more a bank account is going to be relevant to you, so that the bank can take it risk on its balance sheet and do maturity transformation on your behalf. And so that's where I'd kind of say. But if you think about a 5-year-old getting pocket money in CBDC onto their mobile, and then starting to work informally in their early teens, and then starting to work more formally in whatever role they are, especially if they're low to moderate earners, they can get paid in CBDC, right? They can then pay their rent and their rate and their utility bills away in CBDC and have the rest of it spare in CBDC, just like everybody used to with cash, right? And then posher people who want maturity transformation can go along to a bank and get a bank account and build up a credit rating, and off they go. Now, this is a UK analysis, but there are a lot of people in the UK who just don't need the maturity transformation that a banking structure does give you, but at a cost. And CBDCs would be much less frictional for them in their everyday use of money.
Thanks, Tim. Mehmet, on the cost of cash, keep it brief, please.
Yeah. So this is really a great question, by the way. So one of the objectives of central banks in considering CBDC is actually to reduce the costs associated with issuing and managing physical cash. That's okay. That could be the case. CBDC may reduce the costs related to issuing cash, minting, and distributing of cash. That's fine. But there will also be costs related to developing and maintaining CBDC. I don't know, related infrastructure, software costs, etc. And it seems cash is not going anywhere. Anytime soon for many countries. So cash will be still around. So most likely a central bank will need to manage both systems, both CBDC and cash system. So a central bank needs to consider the costs on both sides. What I mean is it shouldn't be assumed in advance that CBDC will reduce the costs. Thank you.
Thank you very much. And last question before we go to the poll. How can CBDCs address traditional hurdles of accessing digital financial services? Ali. Ali, go.
So Michael, I liked what Rory said about cross-border. So here's the perfect use case for CBDCs as far as Africa is concerned. The deficit for micro, small, medium enterprise funding in Africa is an annual $330 billion. Those are World Bank figures, not Ali Hussein's figures. That's the deficit every year, $330 billion. That's number one. Number two, Africa trades the least with itself. Total intra-Africa's trade makes up only 15% of total trade in Africa. One of the biggest problems within intra-Africa trade is we demand dollars or pounds or other so-called reserve currencies. Don't get me started where that bloody term comes from, but that's where we are at this point. Here's the use case for CBDCs. Let all central bankers in Africa talk to each other. Let's connect seamlessly within the economic ecosystems. That's the best use case for CBDCs as I see it. Thank you.
Amazing. Thanks, Ali. I definitely learned something new here. So we'll go. Thanks, everyone. This was a fantastic discussion. We'll go to the poll quickly so that the audience still have time. Ariel, if you can pull it up. I think it's happening on Swapcard. Okay, so we're standing by for the results coming in.
This is very exciting.
Oh, wow. So these are very interesting results. 45% said yes and 55% said no. So I think this very well reflects the global discussion, which is we don't really know. We're still checking for good use cases. We're still checking for design. We're trying to figure out who should really be designing it. And also one of the things we haven't touched on so much is what role should the central bank play and where do we get to a place where they become too involved in the retail payment system and therefore our economies, right? So I just like to thank all of the speakers a lot. This was an excellent discussion. Definitely learned something new. I hope the audience learned something new. And yeah, I can't wait to use a CBDC for the first time somewhere. And hopefully it will be a private one, because I, for one, want to be able to buy a pint in the pub in London and my bank not knowing about it. So I'll close with that and wish you all a very nice evening. Thank you.